The conference is now being recorded.
In a market that has seen its fair shares of fluctuations and uncertainties, our strategy is clear. We are here to grow our business with a resolute emphasis on high-quality margins and products. It is a path where transformational margins are not just a metric of financial success, but a testament of our resilience and innovation. We acknowledge that these are times of shifting sands where consumer demands can sway. Yet, against all odds, our brand resonates, and it resonates strongly. In this quarter, we welcomed 45% of new customers, extending our reach to fresh audiences. This is a testament to the enduring relevance of our offerings. As we move forward, our journey isn't just about maintaining our position. It's about crafting a legacy that transcends generations. We are here to embrace India's growth aspirations and be a catalyst of those cherished moments. Our Q1 FY2024 performance gives you a flavor of where we are headed, and we look forward to maintaining our strategy on margins and seeking sustainable growth. Thank you. I'd now like to hand over the call to our CFO, Mr. Mukesh Sharma, who will get into the financials of this quarter. Thank you.
Thank you, Vinayasha. Good afternoon, all. It's my pleasure to welcome you all to TBZ Limited's Q1 FY24 earnings calls today. Q1 FY24 was marked by an impressive margin growth, a testament to our strategic initiatives and unwavering focus on cost optimization. Notably, our gross profit witnessed a YOY increase of 30.7%, complemented by a 342 basis points improvement in gross margin. This early-stage margin growth reflects our dedication to financial discipline and decision-making. Our EBITDA also demonstrated robust growth, surging by 72.6% YOY to reach Rs 32.2 crore. This reflects our efforts to strike a healthier balance between revenue generation and cost management, as underscored by a noteworthy 243 basis points improvement in EBITDA margin. In addition, we achieved a 293% YOY growth in PAT, reaching Rs 11.4 crore. This rise in profitability and returns underscores our commitment to delivering value to all our stakeholders. In Q1 FY24, we have experienced the early stage of our long-term margin growth, attributed to our rigorous financial discipline and smart decision-making. Our primary focus is on robust operational leverage and exceptional value for customers. Going into the future, we look forward to embarking on a journey of growth with a focus on further optimizing our operational efficiency. The margin improvement in Q1 FY24 is bolstered by our culture of fiscal prudence and strategic pricing, with an emphasis on cost management and industry positioning. We are setting the stage for transformative returns. Looking ahead, we are well positioned to seize market opportunities in line with India's promising growth led by consumer demand and upholding TBZ Limited's 158 years legacy amongst India's most trusted jewelry brands. The company remains steadfast in its commitment to innovation, customer satisfaction, and sustainable financial growth. Thank you for your time and participation in this interactive session today. We will now begin with our question and answers.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Mr. Bhimji Zaveri from Crown Capital. Please go ahead.
Hello, good afternoon, sir, and thank you so much for taking my question. Firstly, sir, congratulations on the great set of results. Sir, I wanted to know, sir, with the start of with the quarter one behind ourselves now, what do we see our FY24 outlook in terms of revenue and margin?
We look forward for around revenue growth around 15 to 20%. And margin, as you can see, we have already delivered 2.5% PAT margin in Q1 in financial year 23. So I believe that we would be much ahead on that percentage as well. We should be delivering more than 2.5% PAT margin for the entire financial year FY24.
Okay, sir. But sir, with this kind of growth, we might be able to, have better operating leverage. So are we being a bit conservative in our PAT margin, or will we spend more of our margin on ads?
See, if you see a YY number, we have come a way ahead on the PAT margin delivery. We foresee there would be price challenges would be there in the future, and which will create a pressure on the margins as well. So we believe that 2.5%, above 2.5% margin is quite achievable.
Okay, sir. And sir, what kind of ad spend and store expansion we might see this year?
We are expanding through our franchise network. We have a couple of discussions on. In fact, work is on with a couple of franchisees, and we are hopeful that we should be able to see few stores coming up around Diwali season from the franchise network percentage. The ad spend is in line with the revenue. It goes, on a yearly basis, we spend around 1.8% in the marketing cost. However, it differs on the quarter to quarter or festive to festive. The spends differ.
Okay, sir. And sir, with our long-term growth, maybe not right now, but how would we see maybe nearly next 3-4 years, we might be able to double our revenue? What's our maybe long-term vision, that we have for ourselves?
Yeah, so I can't commit whether it will be double or how much, but as you correctly said, we are very positive and focused for the future growth. It would be hard to predict growth because, any price increase in the gold also has an impact on the consumer demand.
Correct, sir. I think most of my questions have been answered. Thank you so much, sir, and all the best.
Thank you, Darshil.
Thank you. We take the next question from the line of Mr. Rohit from Samatva Investments. Please go ahead, sir.
Good afternoon, sir. Thank you for the opportunity. So my first question would be on the gross margin part. So how much of this would be due to pricing benefits, that the gold price benefits we received during the quarter, or will it be due to the product mix change of gold versus studded jewelry?
Yeah, good afternoon, Rohit. See, the gross margin increase is a mix of all these factors. The gold price did contributed to a margin growth. In addition to that, our gold and diamond business ratio is also tweaked in this first quarter. There is also a better sourcing margin in diamond and gold category. It's been increased. So all these factors are contributed to an increase in the gross margin.
Okay. So what will be the mix of gold versus diamond, if you could,
See, historically, we have been 80-20, but for the quarter one, our diamond ratio has increased to 25%, and the gold is 75%.
Okay. Fine, sir. Sir, and do you feel you can maintain this ratio for the year, or how do you see it? Like, will we go back to the 80-20 part, or do you still foresee it?
We believe we will be able to maintain this, or maybe 1 or 2% here and there. But we believe because the diamond, we have much better designs and the pricing for the diamond jewelry. So consumer trust on the diamond jewelry as well, a lot on the TBZ. So we believe we will be able to maintain this ratio.
Okay, got it. So my second question would be on the retail, the stores outlets. So if you look at last 2 years, 3 years, we haven't added a lot of stores. So what was our strategy, in the last 2.5 years, and how will it change going forward? in terms of adding stores? You mentioned you're, speaking to a couple of franchises. So I just want to know, last 2 years, what was our exact goal and how do you foresee it going forward?
Last year was quite challenging because it was a COVID year, and we have focused from last year onwards. We have focused a lot on the back end and improvisation in the margins and increasing the efficiency in the back end. Keeping in mind on that aspect, we have in fact shifted a few of stores. So it's as good as closing one store at one location and opening altogether a new and fresh store at a new location within the same city. So we have done that changes in a couple of stores, and which has given a positive results to us. So that is what we are doing currently. We are focusing on our existing Lagarde stores and moving the location or improving the store look and feel. So a lot of focus is on the back end and the efficiency and margins and all. In future, yes, we do foresee a growth through franchisee network. We have a lot of inquiries coming for the franchisee, for TBZ, and we are very positive, and we believe that we will be able to drive the growth through the franchise network.
Got it. So, but on the franchisee network, if I'm not wrong, in the past, we tried to, expand through the franchisee network, but it didn't quite work out for us. So what changes and how are you so positive on the franchise growth going forward? Because if I'm not wrong, in the past, we weren't able to grow through the franchise route. So what changed right now?
See, we already have 3 franchise operating for TBZ. So I may not be able to comment that whether it was not worked out in past. I'm not aware about any such thing when I look at the numbers of past. But we are very hopeful. As I said, there are a lot of franchise inquiry for the TBZ brands. In addition to that, a lot of competition has taken the growth through the franchising, which is quite evident. So it's a proven formula. So that should not be an issue. I don't foresee any issue. We are open for all kind of franchisee discussions. So I foresee particularly that it will bring a lot of growth to the company through the franchise network.
Got it. So any particular number we have in mind, like how much do we want to add every year going forward?
See, the idealistic scenario in any retail business would be a 50-50, own store and franchise network. But I am not fixing any number as of now. As I said, we have got a couple of inquiries, few stores we may see also around Diwali open to franchisees. Yeah, so not any specific number I have taken right now.
Got it. Okay. Sir, and one more question was on the sourcing strategy. Like if you look at competitors, they are much larger scale in how they source. So in terms of sourcing, have we changed any the way we source our raw material? Any changes in that aspect?
Raw material change, there is no change in the strategy. Yeah, there is always a continuous churn and improvement keep happening in the back end when we talk about the jewelry sourcing. But raw material, there is no change.
No change. Okay. Sir, and one last question was, in the presentation you mentioned that the new Kalpavruksha plan. So, what is it? So, what was the old and how has it changed? So I just want to know what do you mean by new?
Yeah. So, Kalpavruksha plan, there is a lot of changes has happened. I would suggest that you can have a copy through our website. You will be able to see lots of change in Kalpavruksha plan. It is made much more consumer friendly. In fact, we have given a lot of option to consumer because we see a lot of demand of our Kalpavruksha scheme by the consumers. So we have made it a lot of exit options we have given to our consumers. So they can enter into Kalpavruksha, they can exit at their own convenience from 5th installment onwards, which I don't think so is there in the market with any other jewelers. It's much more consumer friendly. I would encourage you, if you can visit one of our stores or if you go to our website, you'll get to know more on the Kalpavruksha scheme.
Okay, got it. Sir, and my last question on the margins. So, are you confident that you can sustain these margins? Because last 2 quarters we have improved quite a lot on the margins part. So this between 13 to 14% gross margins, is it sustainable for the next year or so?
Yeah, so if you follow TBZ, you must have seen last quarter result. We had delivered 14.1% margin in Q4. Q1 FY24, we have delivered 13.9%. It's quite evident. If you go back, you will see the similar margin range.
Got it. Thank you so much, sir, for answering in detail and wishing you all the very best. Thank you.
Thank you, Rohit.
Thank you, sir. The next question is from the line of Riya Savant, an individual investor. Please go ahead.
Good afternoon, everyone. Just had a couple of questions. My first question would be, what is your outlook for the Indian diamond jewelry business in India? And what market share do you currently have according to your assessment? And how much are we aiming, for the next 2-3 years?
Good afternoon, Riya. We see outlook for the jewelry business is quite bright in the Indian market. The love for the gold jewelry and diamond jewelry will never fade. It has survived all the ups and downs of the past, which shows the confidence of Indian consumers in the jewelry business. Market share is hard to define. There is no specific data available which shows that there is any specific market share. In fact, in jewelry industry, there are very few structured players, but lot of unstructured players exist in the market. So, saying any number would be a wrong depiction of the market share.
Right. Just had another question. Regarding the customer acquisition, we see that there is like 45% new customers during this period, which is quite an achievement. Can you just shed some light on the unique approaches on your marketing strategy that has played, a role expanding your customer base? Also, if you could specifically, reach out to how do you guys, reach out to the first-time customers to TBZ? So if you could just put some light on that.
Yeah, so see, TBZ is a aspirational brand for the consumer. So whenever there is a value angle comes during any festive, we always see a surge in the new customers coming to our stores. The KP scheme also contributes to our new customer acquisition. We have a lot of digital reach. We have a lot of followers in Insta. Whoever visits our stores gives lots of likes on the social media, and they all visit. Following them, a lot of people visit. So these are a lot of factors which has contributed to new customer acquisitions.
Right. Thank you so much. Thank you so much.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star and 1 on the touchtone telephone. We take the next question from the line of Riddhi, an individual investor. Please go ahead.
Hi. My question is, how are you tracking walk-in customers? Is there a matrix used?
Sorry, can you repeat your question, Riddhi?
My question is, how are you tracking walk-in customers? Because I've read that 80,000 customers came in the...
See, every store has a footfall count by the store. We have a security. So they count the footfall, and we have a robust mechanism of documenting those footfall under various categories in the store by store we track, and that goes into the company's IT system. So from there we track the customer count.
So you're saying that there would be a technology which is actually counting people?
Yes.
So don't you think that there would be an issue, because if one person is going in and out twice or probably multiple times, then that would be a double count there?
No. So there is no such possibility there. When in our stores there are checks and balance. In fact, there is a register. Whenever customer comes, they enter their name, phone number, and all. Yeah. So the store counts the customer basis. The actual one person walking into store 4 times is counted 1 on the.
Okay, so it is done manually. So a person has probably maintaining a register and 80,000 registrations were done manually.
Yes. If it is computerized, it will be counted 4, but if it is manual, it gets counted 1. So we count 1 if one customer walks 4 times during the day.
Okay.
Yeah.
Thank you. The next question is from the line of Sneha Jain, SKS Capital. Please go ahead.
Hello, am I audible?
Yes.
Yes, so thank you for the opportunity. I just wanted to ask, do we see a threat basis on the lab-grown diamonds? Do we have a threat to our business in that? And what is our take on that?
No, we don't deal in lab-grown diamond at all.
No, we don't, of course, but there's a market for it. So I just wanted to ask, I mean, it's growing day by day. So do we see it as a threat? That's what I wanted to ask.
We don't see threat. See, diamond is a diamond. However much lab-grown, in India it hasn't picked up also. So Indian consumers not believing in lab-grown diamond. So the love for the diamond will never fade. That's our belief, and we are not going to get into this business at all.
So the demand is intact for natural diamonds, right?
Absolutely. In fact, we are seeing the demand has been increasing. In fact, in the Q1 also we have seen 20% growth in our diamond business.
Mm-hmm. And so there was a recent study that we are seeing for the year, for FY24, the world is seeing like a 10% degrowth in gold business, basically, gold demand. Do you foresee that, or do you think India would be an exception in that?
See, there is a report of World Gold Council.
Yeah.
Which has shown that the gold jewelry demand has declined because of the higher prices in Q1. It has declined more than 8%.
Yeah.
The report is good. And we also see in the gold business, you can see our revenue numbers are flat.
Okay.
So the gold number has gone down, obviously. So there is an impact, but this impact is a temporary.
Okay. Have you seen any revival? I mean, in the coming wedding season, do you see you foresee any revival in the demand?
Absolutely. There is not. See, once there is only immediate reaction. After that, it settles down at that level. So if you see gold journey, it gets settled down at a particular level, and after that, then again there is a jump. Demand goes down, but then again demand picks up. We have seen this quite in past. In fact, in COVID also you have seen the gold prices have gone up 50%, 60%. And there was a dip in demand, but then again it gets settled down at that level.
Okay. And so are we seeing any, we haven't seen any institutions in our shareholding pattern. Are we looking, is there any inquiry or something like that in that direction?
See, whatever movement is through the stock exchange, people are investing. There are a lot of investors who keep coming and buying through the open market. There is no such discussion with any of the investors at the back end.
Oh, that's all. Thank you so much.
Thanks.
Thank you. The next question is from the line of Mr. Narendra from Robo Capital. Please go ahead, sir.
Yeah, thanks for the opportunity and congratulations on a good set of numbers. My only question is, are we looking to expand our store count in the coming years, or the rest of the expansion would be through the franchisee line?
Thanks, Naresh. I think it's a mix of both. While we are not committing on our own store, however, at the back end, we are looking for a newer market or the newer locations in the same city. So the search is on. I foresee there will be a couple of stores which will come through franchise network, but own store we don't rule out.
Okay. And so what would be the, rough average of your capex that you need to do on one store, opening a store? Any number if you could provide?
Yes, roughly around between 2-2.5 crore, somewhere in the range of 10,000 square feet we spend. So on an average 2,500 square feet stores comes around 2.5 crore.
Okay. Thank you so much. All the best.
Thanks.
Thank you. The next question is from the line of Ankit Shah, an individual investor. Please go ahead.
Yeah, hi. So my question is that our ROE, if I look at even, last 12 months, is around 8.5%, 9%, right? So despite all the improvements, our ROE is still way below what most other, jewelry firms are at, right? So what are the reasons for that? Are we carrying too much working capital related, versus the revenues, or are there any unproductive assets? Can you just explain this part? Thanks.
A lot of work is gone in FY23, and you will see the ROE is gone above 10%. Yeah, and it will continue to remain above 10% in the coming quarters as well. So we have been maintaining the ROE more than 10% in last 3 quarters in a row, and it will be much more better than the current number going forward.
So, no, I'm just trying to understand the reason, because the 8%, 9%, 10%, there's not too much of a difference. If you look at most of the jewelry players, whether it's Kalyan or Titan or any of the other ones, they are about 15, 18, 20%, right? So there is a huge gap.
I don't disagree to you, Ankit. Of course, there's a scope of improvement, and as I said that the ROE has been more than 10%, and we foresee it to be improving continuously. And this is what is quite evident if you see from last 3-4 quarters. The numbers, if you see the margin numbers has increased, and we are rationalizing the inventory. In fact, our quarter-on-quarter gold inventory is also down by around 5 to 7%. So we are continuously working on both sides, improvement of the margin and rationalization of the working capital, and which will obviously reflect into the ROE. So then I don't comment on the others, but yeah, we are continuously focused on the improvement on the ROE.
Got it. Okay, thanks.
Thank you. The next question is from the line of Ashwin Reddy from Samatva Investments. Please go ahead.
Yeah, hi. Good evening. I had a couple of questions. So first was on the sourcing part for the gold jewelry, because I understand the entire gold jewelry is sourced from vendors. So I'm trying to understand what would be a differentiation, or because you are known for designs, right? So what is it that enables you to get the better designs from your sourcing vendors versus the larger scale players? So do they get better terms, or what exactly enables you to have an advantage in sourcing versus the bigger players?
So I may not be able to answer on the quite detail. I can only give you an overview that the gold jewelry, it's a mix of the gold order department who work on a lot of designing side of the gold jewelry. TBZ is known for its designing part. We continuously develop the vendor. We continuously work on the different designs or different weight range or different margin percentage, product mix. There are a lot of things which goes into the gold jewelry. I'm not the expert to answer on that. I would be happy to answer. If you can send a detailed query, we would be happy to answer your query.
Sure, but just to get some more clarity, so do you design and then the vendor makes it, or the vendors come up with designs and then you select?
It's a combination of both. The end result is the best designing delivery to the consumer.
Okay.
Yeah.
Okay, and secondly, in terms of your geographic focus, so are there any specific states where you want to go deeper, or how do you want to go? Because right now you are still subscale, and and it might not be prudent to spread across a large area. So any areas, many specific geographies you want to highlight where you want to spend your energies on, or how are you thinking about this?
So there is no specific geography we are focusing. As a commercial prudence, if you expand in the same city, demand across India is there. You can go to B cities also. There is a huge demand. It's only depending on how much capital you want to invest and how much return you get out of it. So we see there is a demand all across is there. We are focusing that expanding in the new geographies, which is near to our current states. Maybe, like for example, if you are in Odisha, we would be expanding in maybe we are in West Bengal, so we may be expanding in Odisha or maybe expanding in Jharkhand states. So these are the nearby, so that operationally it is easier for us to manage the stores.
Got it. And say if you take a 2-3 year kind of a view or more longer view, so would you believe that the proportion of the diamond jewelry will continue to keep going up from the current 25%, or this is like a new normal and it will settle here? Because you were at 20, now at 25, but will this be the new normal for you going ahead, or can this keep increasing in the times ahead?
We do believe
what's your focus on?
Yeah, we are focusing on diamond jewelry also. There is a huge demand of the diamond jewelry, and we believe that we will be able to maintain this ratio.
Okay. But it will not go up from here, is what you're saying, in the next 3-4 years.
It's hard to predict, it's the consumer demand, but yeah, we believe that we are committed that this ratio would be going up. Yeah, a lot of work is going behind that also.
Okay.
So we are trying to increase the ratio. We have, last quarter I couldn't have promised that we would go to 25%.
Correct.
We have been able to deliver because there's a work constantly going on in the back end. But we believe that we should be able to maintain this ratio.
Correct. So the context of my question is this like a focus area for you, or would you want to grow both gold and
both.
Diamond part?
See, we have to deliver to the consumer's demand. Consumer believes a lot in TBZ brand and design. It's more aspiration for them. So they do come for the gold jewelry as well as diamond jewelry. Both has a different place. So it's not that we would not be focusing on gold jewelry. We do focus on the gold jewelry, which is a larger chunk of our business. Obviously, we will be growing that business also. It's only a matter of seeing that which grows how fast and what ratio comes out of it.
Got it. Thank you so much, and good luck for the future.
Thank you.
Thank you. The next question is from the line of Yash Mishra from SKS Capital and Research. Please go ahead.
Yeah, hi. This is actually Amitabh. I was wanting to know that basically as a company, we're a well-entrenched player in the industry for a long time. We're a very strong brand, a trusted group, for generations now. In the last 5-10 years, the value of the listed players have grown manifold, and whereas TBZ seems to have been, we've grown the value in the last 5-10 years. What are your thoughts on that? Why do you think you've been such a big laggard, both in terms of performance as well as market value and perception amongst investors? It seems like we've been listed for so long, but there's no interest amongst any serious investors in your company.
I don't think so there's any answer.
And your promoters also, for a small company like yours, your promoters also do not meet investors or come on these conference calls, which shows lack of interest to create market value.
The opening call was from Ms. Bhimji Zaveri, who is the promoter of this company. Okay,
Sorry?
The opening call of this investor earning call was from the Ms. Bhimji Zaveri, who is the promoter of this company. Yeah.
Okay.
The promoter's belief in the company gets reflected in the holding what promoter is having. Stake what promoter is having in this company. They have a 75% stake, which is maximum permitted by the SEBI. So from a promoter's belief, I hope this question is answered. From the past 12 years, going into that discussion, I don't think so we are going to lead to any discussion or any conclusion. If you see in last 1 year, the company has delivered more than 40% growth in its share prices. That itself shows the belief of the investors in the company.
What about the investors who've been invested for the last 10 years? What returns have you given to them vis-a-vis a company like Titan? Why have you been such a laggard? There's no comparison, Maybe 10 years ago, Tanishq, when you were 15 years ago, might have been the same size. And now there's no comparison. So are we looking to change anything to kind of, and the jewelry sector in India, as everybody says, has a huge opportunity. Others have been successful in capturing that opportunity, both in terms of revenue, profitability, and market value. But is there anything that we can do to kind of improve, sustain, have a high growth and sustained performance with profitability and change in market perception? I know it's a lot of deeper questions, but the idea is to just kind of
I get you where you are coming from. I think, it's last 1 year, if you see the growth momentum, I think that should answer your question to some extent. And in the future years, you'll be able to see lot of value increase in the valuation of the company. So that will be there. That shows the faith of the lot of investors in the company who has invested. And we do understand that your point. And therefore, if you see in last around 3 to 4 quarters, we have been continuously working on the value increase for our stakeholders. That's why I said if you see last year to this year, there is more than 40-50% increase in the valuation. So I do believe that it may not be up to your expectation, but yeah, we are working continuously working towards it, and we are hopeful that in next year or so, we should be able to be placed among the right well-weighted company.
Okay. All right.
Thank you, sir. Before we move on to the next question, a reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone phone. We take the next question from the line of Bhushan Wankere, an individual investor. Please go ahead, sir.
Hello.
Yeah, Bhushan, we can hear you.
Yeah. I just wanted to you to pinpoint the core operational adjustments or market strategies that assisted your growth in profitability and returns. And do you expect it to be sustainable going forward?
Yeah, we do expect that the growth will be sustainable. If you see, the gross profit in Q4 was 14.2%, and gross profit in Q1 is 13.9%. So the gross profit remains in the same range, and we believe that this is only going to increase from here on. So we do believe that the growth momentum in the profitability will be maintained. We are very cautious about the cost optimization, so cost may not increase in that same proportion. As we see the growth, the profitability will be much higher. See, Q1, Q2 is always a challenging period for all retail business. Q3 onwards, the profitability improves a lot because of the festive, wedding and all kicks in. So you will see much better result from Q3 and Q4 onwards.
Okay. I had one more question to ask. Let me congratulate yourself on the 72.58% growth year-on-year on EBITDA margin. Could you please share some details on precise areas of business where this growth is most pronounced? For example, from diamond or from gold?
Yeah, so Q1, the gold demand was quite sluggish. So we haven't seen a growth in gold business. In diamond business, we did see a growth in the diamond business more than 20%. We saw the growth on quarter number in the diamond business, as well as we also saw the margin growth in both in the gold and diamond business.
Okay.
Yeah.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for the day. I would now like to hand the conference over to Mr. Mukesh for closing comments.
Thank you so much. As we continue our growth journey, we look forward to the road ahead and the potential for further progress. Thank you for your continued support and engagement. If you have any further questions, please reach out to Dickinson and we will be happy to answer. Thank you all and have a good evening.
Thank you. On behalf of TBZ Ltd, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.